सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with.
Hi, welcome. Thanks so much for joining in on this rainy Monday morning. This is Ask Profit on NDTV Profit. My name is Alex Matthew. And the markets are looking reasonably good at the start. We'll talk about that in just a bit. First though, let's talk about earnings. Let's talk about Narayana Healthcare, which has posted a very decent set of numbers, and the stock is reacting positively. It's off the high point of the day, but still up about 4%. Let me take you through the snapshot of the numbers before we get on the management to tell you about the path going forward. The revenue's grown by as much as 18% on a consolidated basis, and this has been led by a good performance for the India business. The margins overall have expanded to 24.2% and led to an improvement in the PAT to the extent of 3% or thereabouts. The realizations for the domestic business for the India hospitals has gone up quite considerably. There's lots to talk about in terms of bed addition. Where does that stand at in the current financial year? What the expectation is for the revenues per customer, patient, all of that and more with the conversation we have lined up. Sandhya J, who's Group Financial Officer of Narayana Health, joining in right now. Sandhya, thanks so much for taking the time. Pleasure speaking with you. Let me ask you first to sum up the quarter gone by. And then there's one aspect that stands out to people like me. Unfortunately, we do look at where underperformance also happens. Seemingly that international business has not necessarily done as well as it might have. What is the reason for that?
Thank you, Alex. Thank you for having me here. So from a performance point of view, I want to set in context that we've not added any capacity in the past few years. Despite that, we have seen very strong growth in our domestic business, while offsetting the impact of the decline in the international business. So Bangladesh is our largest international market. And for the full year, we have seen a 30% decline in Bangladesh. And for the quarter, it's 53%. Despite that degrowth, we've been able to compensate with the domestic business. We've always held that we will not be focusing on the international business and our focus is domestic. We were expecting that the international revenue will fall over a period of time, but because of the geopolitical conditions, it accelerated faster than we anticipated. But the task remains cut out for us. We will have to grow the domestic business and fulfill those volumes which erstwhile we were servicing with international patients.
Right. Hi Sandhya, Varsha here, great to have you. Sandhya, you have mentioned that the revenue growth or the numbers that you have seen is on the back of good realization that the Narayana has seen. Now my question to you is, has a large part of business came from better high value procedures, number one, and number two, what was your volume growth versus value growth? Sorry, value growth.
Yes. So from a pricing point of view, there are two aspects. We do our price increase on 1st of January. So there is a small effect of the price increase also in the ARPP growth that you have seen, though it is a small price increase, low single digits. The other part of the growth which has come from improved payer mix as well as improved procedures. We have also reported our robotic procedures and high value complex procedures have also shown good traction. So all of that is reflecting in the numbers. As far as volume is concerned, there is a mixed bag effect on this because Bangladesh was also a very high volume business for us. High volume, slightly lower realization kind of business. So therefore, we've seen a flattish kind of volume performance for the year owing to the loss of Bangladesh. But if we exclude that, we've seen a reasonable volume increase.
Okay, interesting. I want to ask about capacity because you mentioned that you hadn't added capacity, but the plan is quite an ambitious one heading into 2030 from the current, and correct me if I'm wrong, 5,745 beds at the end of the financial year, heading to 7,680 beds in 2030. And this is going to be a mix, Sandhya, of greenfield, brownfield, leased projects. So can you give me a sense of the current financial year, what is the expansion plan and what is the spend that you have lined up?
So for the current financial year, hardly any of these projects will come online because if you see the trajectory we have given, most of them are coming online. I think one of them is coming FY27, but everything is from FY28 onwards. So therefore, I don't think you will get any additional capacity in the current year. Of course, in terms of capex, we will have capex. Most of the land capex is already done. So there is no further large land acquisition planned unless some meaningful project comes up for us. But we will definitely be investing in terms of the build out of these capacities, that is the greenfield growth, as well as the typical replacement and maintenance capex that we do. So about 300 crores a year is what we spend on replacement, maintenance, new capex, etc. within our existing units. In addition to that, we may spend about 450 crores odd in terms of this greenfield, brownfield capacities that we are trying to create. But these are projects, so the way the spend will get scheduled may be depending on how the construction progresses.
Okay, thank you for that clarification. Just a couple more questions, Sandhya. In terms of the outlook for FY26, you mentioned that the price increases take place in January, and that has had a bearing on the margins as well. Also, the reduction in revenue coming through from the international business currently standing at around 40 crore or thereabouts, dropped from 80 plus crore. I'm just wondering, does that mix change also lend itself to better margins for the rest of the financial year, for the new financial year as well? And what is the trajectory you're anticipating?
To some extent, yes, because we did have the Bangladesh was a high throughput, a lower realization book of business. So therefore, there will be some benefit in the margins. We do anticipate to improve margins like we have done for the past 3 years in FY26 also. Without guiding, a lot of it will come through the same measures which we have taken, which is more throughput through the same infrastructure. No new infrastructure is coming online, but we do aspire to grow within the same capacity, which means we will continue to exercise the throughput levers. So we are hoping that the India margins will see expansion on the hospital side. Of course, we will continue to have cash burn on the insurance business side, and Cayman may broadly be stable in terms of its margin performance. So on an overall basis, maybe we will have a more stable margin performance. But definitely on the India hospital side, we are aspiring for margin growth.
Also, Sandhya, just coming back to the your capex plans. So, how are you going to fund this capex? Number one, and will there be capex in Cayman also? Because you've done lots of capex when it comes to Cayman Island.
Yes. So, as far as Cayman is concerned, we have exhausted the capex needs of the geography. Therefore, even if we do, it will be very small maintenance capex. All the capex will be invested in India only, and we are funding this mostly through debt. Our debt, net debt to EBITDA is 0.15 right now, and therefore there is a lot of headspace for us to borrow. So we will try to utilize that space we have.
Very quick follow-up to that, Sandhya. Where do you anticipate it moving in FY26? Net debt to net debt, I mean.
Yes, not necessarily FY26, but over this project period, the next 3 years, we will at some point in time definitely hit a net debt to EBITDA of 2 at least. Our aspiration is that we want to keep net debt to EBITDA under 2. Unless some really interesting project comes for us and we may need to breach it for a short term, that's the range within which we operate, and that's what drives our capex decisions as well. So over the next 3 years, there will be a point there where we will breach the net debt to EBITDA of 2.
Sandhya, absolute pleasure speaking with you, and exciting times ahead. Thanks so much for joining in.
Thank you for having me here.
All right, let's talk about the markets very quickly, and we'll jump straight into the questions that some of you have already sent through. We did start off very positive, but we've given up a little bit of ground for the benchmark Nifty 50, and indeed for the broader markets as well. I'm just pulling that up on the screen right now. The mid-cap index gaining about 0.5% or so. The small-cap index around that same mark, about 0.5% higher at this point. And take a look at some of the stocks that are in focus, because you have a few big reactions to earnings. One of them, GVT&D. This is GE Vernova T&D. This is a company that supplies equipment for the transmission and distribution space here in India. Very strong set of numbers, margin expansion and order wins also taking it through the fourth quarter. You have a few more. JK Cement looking particularly good on the back of the fourth quarter numbers, up about 6% or so. Narayana, we just spoke with the management, it's up about 4% or so. GNFC, this is Gujarat Narmada, chemicals and fertilizers, and this is stock that is doing quite well, up about 4% off the high point of the day, and valuations, according to our experts who spoke to us earlier on in the day, are quite attractive at this point. Something like a Balkrishna Industries on the other end of the spectrum, not doing particularly well on the back of a weak quarter four, and also on the back of the expansion plans in India, where they're likely to set up a radio business right here in India. Of course, if you know about Balkrishna Industries, you know that it's an off-road tire manufacturer that has a large amount of its revenues coming through from exports. So several stocks that are in focus, and we've got Brijesh Iyer, who's the head of technical and derivatives at retail research at IDBI Cap, as well as Saurabh Jain, who's equity head research at SMC Global Securities, joining in this morning. Gentlemen, thanks so much for waiting by. Appreciate the patience that you've shown. Let me ask the first question, which is incidentally on GE Vernova T&D. We've got a viewer who has bought at levels of 201. Which is incredible. He's got 4,001 shares, so it's a 10-bagger for him, and bought it about 2 to 3 years back with a view of 10 years in India. What is the fundamental view, in case you've seen the numbers, Saurabh?
Well, the numbers were quite good, but on the valuation side, I feel that the stock is expensive. I think it is quoting about at 30-40 times to book value and about close to 100 times to its trailing earnings. I think he has already taken a good amount of profits. I mean, it is a time ladder kind of a stock for him. And in my opinion, I think the growth, the forward growth is largely being reflected in the current multiples. So in my opinion, I think he should take some profits off the table.
Take some money off the table is the view, and you've made some considerable gains. So congratulations on that. Ugrow Capital is the name of the counter we're talking about next. And Srinivasan from Hyderabad is asking this. Bought at levels of 216, asking whether he can add more at this point. Brijesh, what's the view on the charts?
Hi. So basically, this is quite looking okay. It's positive on charts. Maybe there can be a further momentum can be there. I think this can go back to 200, 210 level on the higher side. So if he's having a position, I think he should hold on to the longs.
Hold on to the longs is the view. So what would you keep the stop loss as in this trade, and what are the key levels to watch out for on the higher levels?
So basically the 160 was the level from where the demand has come. So I will take 160 as a stop loss. And on an immediate basis, as and when this 190 is taken out, I think that will be a fresh upside will be there. But structurally, it is looking positive. So I will hold on to the long position.
Okay, it's up about 4% in trade. One stock to keep on your radar, certainly. Sunil from Visakhapatnam is asking the next question. Tilaknagar Industries is the name of the counter, and he's bought already. He's bought 100 shares at a price of 356. The stock is up and about in trade today, 6% higher. The question is on the fundamentals. Sunil wants to hold for a period of more than a year. What's the outlook on the fundamentals, Saurabh?
All the Alcobev beverages companies have posted good set of numbers. Tilaknagar Industries last quarterly earnings were out and they were good enough, and the management is quite confident of their portfolio going forward. So in my opinion, I think he can hold.
Hold is a view. Very quick view, Brijesh, on the technicals as well. Is this the key level to add more?
Not exactly. I won't be looking to add any fresh trade because the risk reward ratio won't be favorable. But then he is already having a position. I think one should hold the position because it can go back to 400 plus levels. So hold is the view from my side.
Hold is the view on Tilaknagar Industries. Now is not the time to add more. Dheeraj is calling us from Hyderabad, the first caller for the day. By the way, in case you want to call us like Dheeraj has, you can call us on the number at the bottom of your screen. That is the landline number to call us on. Dheeraj, hi, good morning. How can we help you today?
Sir, good morning. My query is regarding Azad Engineering.
Okay.
They declared the results on Friday, I guess.
Yes.
So I bought these shares on Friday. So 92 shares of Azad Engineering at 803 rupees.
Okay.
Can I add more at current levels, or can I add more something like Gravita India is my query, sir.
Okay, and you bought this. You bought this based on the earnings, Dheeraj. The earnings were quite good. Would you say that you are holding based on the fundamentals?
I bought these before the earnings, sir. I expected a good performance from their quarterly earnings.
Yes.
The stock jumped to 1865 in the morning, but it came back to 1805.
Yeah.
So should I stick with the same counter for another couple of months?
Okay, so it's okay.
Stick to something like Gravita India is making.
I got your question. So you bought it based on the price move that you expected. So therefore, Brijesh, on the charts, what's the view on Azad, and would you hold this or would you switch to something like a Gravita?
First, I won't be holding to the Azad because the level of this 1800, 1850 is the supply zone, and historically this level has acted as a very stiff resistance. So I do believe there can be some more profit booking, and this can come back to 1700 levels. So I would first take an exit from this, and definitely if I need to switch to something else, I would do that.
Okay. And specifically on Gravita? If we can pull up Gravita India, let's do that.
Yeah. So Gravita, okay, not exactly, because the Gravita is also something which is observing a profit booking and has broken the 200 moving average. And there has been selling volumes which I can see. So I think this can also come back to 17, 20 level. So there is no positive trigger in Gravita. So I won't be taking any fresh bets on the Gravita.
Okay, then let me ask you this, Brijesh. If you're got a sell call on the previous stock, and if it's not a buy on Gravita, then what is your high conviction buy at this point for a period of 2 months?
So we today one of the stock like Camlin Fine is some stock which has come into my radar. So I think the momentum is quite positive. We can bet for 20-25% move from the current level. So Camlin Fine is something which I would like to take a bet, and currently it is trading at 210. So I think it can go back to 230 to 45 levels. So I think I would make a shift at Camlin Fine.
Camlin Fine is something you should watch out for. It's up quite considerably in trade today, 12% higher. But it's still a buy at this point. Sudha is calling us from Saudi Arabia. Sudha, very good morning to you. Thanks so much for calling us. How can we help you today?
Hi, good morning. I'm having a question on CDSL.
Okay.
Can I buy CDSL at current market price, keeping NSE IPO on mind for short-term gains?
Okay, so what is the connection?
CDSL.
Yes, I got it. But why are you watching for the NSE IPO?
Because I have on mind as when NSE IPO comes, these capital gains sectors will also have lead.
Okay, understood. Okay, and when you say short-term outlook, how long would that outlook be?
Maybe 6 months to 1 year.
Okay. All right. Saurabh, what do you make of that? CDSL, of course, is a capital market play and it's gained quite considerably in the recent past. Let's pull up, if we can, the 1 month, 3 month charts just to drive home that point. There's been a bit of a comeback of some of these names. It's up about 11% or thereabouts over the last 1 month, and it's gained about 22% over the last 3 months. But specifically on the NSE IPO and the implications there?
I think there is no largely a good connection between CDSL and NSE. I think people are making connection with the BSE, but that is also too expensive, even after the because of the split has happened in that in BSE also. In case of CDSL, I think on the operational front, there is no problem. The company is posting consistent growth, but yes, there is a concern on the valuation. Because of the valuations, high valuations, the stock corrected very largely, and now a bit of recovery has come from the lower levels. But still, I think I find the stock expensive, 20 times book value. I think one should refrain from investing in the highly valued stocks.
I want to come back to you on Divi's Laboratories. It's a stock that is in focus today, Saurabh, and it is gaining quite considerably, 4% higher at this point and holding on to the high point of the day at 6743. We've got Chandan Jain, who's writing in from Hubli in Karnataka, and he's bought at levels of 4,000 rupees per share. He's wondering whether he should hold or book profits at this point, and this is reacting to a pretty strong Q4. Wouldn't you agree?
Yeah, I mean, Divi's lab is a bellwether in the pharma space. I think the numbers were very good, and these stocks generally do attract high valuation. If you look at on the valuation side, it's trading at 30 times to book value. So, in my opinion, I think it's a kind of a portfolio stock. If you have a long-term perspective, I think you can stick with it.
Stick with it is a view on Divi's Laboratories is up about 12%, as are a number of other stocks in the last 1 month. A lot of stocks making a comeback, 4% of that move in today's trade itself. We've got the next question from Jishan, who's writing in from Hyderabad, asking about Equitas Bank. He's bought at levels of 98.3 and he's looking to hold basis fundamentals for at least a year. He's incurring a loss at this point because of the various issues that this company, this bank has had to face. Saurabh, on the fundamentals, would you hold on?
I think it is one of the weakest in the small finance bank category. The balance sheet is in pain and the numbers were bad. There is an issue with the NPAs also. So my sense is better to exit from a company like Equitas SFB. And you can switch to medium-sized public sector banks, for example, in the case like the Union Bank or maybe a bigger bank like Canara.
All right, so exit is a call on Equitas Small Finance Bank. By the way, we have to slip into a very quick break. We've got several of your questions that are lined up and a few of you are on the phone line. Do stay with us. We'll be back very quickly.
प्लस क्लियर ग्लास, कार हो या नियर, सब कुछ दिखे क्लियर।
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready.
Welcome back. You're watching Ask Profit. This is the show that gets you answers to all of your stock-related questions. And the first caller that we have on this side of the break is Murli, who's calling us, apologies, from Bengaluru. Murli, good morning to you. How can we help you today?
Good morning, sir. Thank you for taking up my query and answering very elaborately. And I bought MGL,
Okay.
Mahanagar Gas, 200 shares at 1352 recently. Considering about 8% or 9% growth for the 4 to 26 given by the management and good dividend yield, I am willing to wait for 1 or 2 years.
Okay.
Can I add more if the price comes down to around 1300? Now it is around 1340.
Yes.
And hold for 2 years. So alternatively, do you suggest any other better growth stock?
Got it.
Which can give a better return than MGL?
Okay. All right. Thanks for your question, Murli. Let me ask Saurabh what he thinks about the fundamentals and the valuations that they stand right now. On a trailing basis, around 13 times price to earnings, not the most expensive stock. Would you say that this is a good level to add at this point, Saurabh?
I think on the valuation side, it is quite comforting, but I think the market is, jittery about the lower allocation for the companies like MGL, and maybe they have to purchase on the gas on the market prices, and thus it will give them lower margins. And that is why the market is worried and that the stock got beaten down. I would not suggest to chip into the MGL till the things get clear, but otherwise I'll suggest him to look for investment in sectors like hotels, banking, capital goods. In the banking, he can invest in the ICICI, in the capital goods, or in the maybe transmission segment, he can go for the KEC International kind of a stock. And in the hotels, he can look for the Lemon Tree.
So there are quite a few stocks that have been named. Murli, hopefully that helps you out. We're joined now by Ajit Mishra. Brijesh, thanks so much for taking the time as always. I think that he's left us already. But Ajit Mishra, Senior Vice President Research at Reliance Broking, joining us this morning. Ajit, thanks as always for taking the time. Let me ask you a question on Hudco. And this is a question coming in all the way from France. Tamil Selvan is asking, he's bought at levels of, he's asking whether to buy this current price for a short-term target of 260. The stock is currently at 235 and up and about in trade today, 3.4% higher. What do you say about that level though, 260?
Yeah, good morning, Alex. So, yes, definitely he can consider. And since his target is 260, which is 25 points up from the current levels, his stop should also be at 225. So, means 1 is to 1.5 is the ratio, basically, if he's okay with that. In fact, he can, the way we are seeing, Hudco positioning its base around its major averages, probably it can surpass the 260 level plus targets also. So, considering the market volatility, I would rather suggest him to maintain a slightly lower stop loss at 220 and then wait for 270, 75 as a positional target.
So those are levels to watch out for on Hudco, and it is hold at this point. We've got Sanjay calling us from New Delhi. Hi Sanjay, how can we help you today?
Yeah, morning Alex.
Good morning.
Thank you very much for taking my call.
My pleasure.
And I am having this small business finance credit, 5,000 shares at the rate of 109.
Okay.
And I have a time horizon till 30th of June. And I'm looking somewhere around 120, 121.
Okay.
Would I be able to get it at these prices or and suggest me a stop loss too, please?
Sure. Okay, let me go to Ajit on this one. Ajit, it's up and about, it's 0.9% higher in trade today, and it has moved up as much as 22% in the last 3 months. Does that mean that the momentum will take it to levels of what, 120 plus? And is that possible by the end of June?
So probably yes, Alex, considering the kind of momentum that the stock has been experiencing, but at the same time, it's a slightly volatile stock. Means if you'll see the last 10-15 days of move, 110 to 92 and then again to 110 levels. So stop is at 102, which is the short-term moving average. So it's 5 points down roughly from the current levels. And 120.25 positionally can definitely be considered as a target.
Okay, all right. So that's the view on SBFC. Sanjay, hopefully that answers your question. And we've got the next question on Aavas Financiers. This is from Gautam, who's writing in from Mumbai. He's bought at levels of 1,833 and he's got a 12 to 18 month time frame. He's wondering whether to hold, sell, buy more or switch to something else. Saurabh, on the fundamentals, he's incurring a bit of a loss at this point. Does he book that and move on, or should he hold on?
But best of the lot, I would suggest him to switch to banking counters like ICICI or maybe Canara.
So you've already mentioned that you like those names in the banking space. All right. So we've got Javinder Kumar Sharma, who's writing in from Amritsar in Punjab, and he's asking about Tata Teleservices. He's got at levels of 79 rupees a piece. The stock is currently trading at 75. He's asking whether to hold or sell at this point. And since he's not given us a time frame, I'm going to assume that he's asking based on the technicals. On the charts, Ajit, what's the view?
So Alex, I assume that he has just bought it. Means in the last trading session, the stock has moved up almost from 57 to 80 in just 3-4 days. Now, today it's slightly down, roughly around 1.5%. So it's a natural move that after such a phenomenal surge, we usually see stock consolidate, and probably around 70, 72 could be the lower band for this consolidation, and upside next swing could help the stock to inch toward 87 plus levels. So as of now, if he's okay with 70 as a stop loss, he can stay put with 87 as a position target.
Okay, all right. Rajan Iyer is writing to us, and he's asking about a stock that is not a very long track record. It's a recent listing, relatively speaking. Vishnu Prakash R. Punglia. And he's got 400 shares at an average price of 193, acquired in July of 2024, and he's ready to hold for a period of 3 years. He's asking what the prospects are based on the fundamentals. Saurabh, what is the view?
I think it is a very good company, very old company, listed recently, but we are quite optimistic on the infrastructure space. But recently, what is happening? Even the companies like HG Infra are not posting good set of numbers. There was some kind of a margin pressure was seen. But from the 3-4 years perspective, I think it should be a good one.
Okay, so hold is the view on Vishnu R. Punglia. Eternal is a stock that we're talking about next, and we've got Rohit who's asking. He's got at levels of 198. Which is actually a pretty attractive price, all things considered. There are people that have been waiting for from higher levels for a good price to deploy. The latest update, of course, has to do with the with the implication of the MSCI rejig and the weightage of this particular stock, and as a result of which there is selling that is taking place purely on account of expected flows. The question to you, Ajit, would you buy at this point if you have the opportunity, or would you hold on to something that has been bought at levels of 198?
So Alex, my suggestion would be to hold, because if you see, it's been almost like 2-3 months of consolidation, this tight band roughly around 200 to 250, and we are currently in the middle of the band while hovering around the major averages also. So probably it can spend some more weeks within this range before we resume the trend. And since he has bought it at very lower levels, he can maintain a trading stop at 215 also, because that seems like the immediate base for this stock. So once we cross, let's say 250 to 60 area decisively, then probably 285, 300, the previous swing high is something that the stock might retest.
All right. Suresh from Hyderabad has got a few names in the banking and financial services space that he's looking at. Among them, he's talking about Bandhan Bank, IDFC First, as well as Ujjivan Small Finance. Saurabh, you've already given your preference. You've said Canara Bank, ICICI Bank are banks that you prefer. What do you have to say about these three that I've just mentioned, though?
Won't recommend to invest in any of the banks, in any of these banks, but he is just noted. But apart from ICICI Canara, I would suggest maybe he can go for a smaller bank like Maharashtra Bank, or maybe a good name like Indian Bank.
All right. So that's the view on the banking space as a whole. It is something to watch out for, as interest rates go down, and we're anticipating that there will be another rate cut in June. There is an expectation that there could be further contraction in the net interest margin of these banks, and that could have a bearing on the earnings going forward. Remember, that wasn't a problem in the fourth quarter because most banks managed to keep their net interest margins stable despite the rate cuts that you saw. Ramesh is calling us from Tamil Nadu. Ramesh, very good morning to you. How can we help you today?
Sir, Ratan India, TVS supply, chain supply.
Okay.
2,000 rupees, 2,000 shares at 187 rupees.
Okay.
What can I do?
Okay. When you bought this, what was the thinking, Ramesh?
I bought 6 months back, sir.
Okay. And what had you thought at that time? Why did you buy it?
The TVS chain supply has good news. That company is TVS company. So only I bought.
Got it. Okay. Okay. So I understood you incurring quite a big loss in this. So let me go across to Saurabh on this one. Bought at levels of 187 and bought a pretty large quantity. So what is the recommendation here?
I think if you look at the numbers, there was a degrowth in the numbers. It's relatively a recent listing. Not much history is there. So I think he can wait for one more quarter or 2 quarters to get the sense from the management. If management is sounding good, then keep on holding. If there is some kind of a nervous, management is not going to give you confidence for the growth going forward, then better to exit.
Okay. All right. So wait for a couple of quarters for TVS supply to turn around. We've got Suman who's writing in from Hyderabad and asking about Amara Raja batteries, which he's bought at a price of 1,276. He's got 55 shares in incurring a loss at this point because it might just be incorrect. All right. So the price may just be incorrect. 1,276 is the buy price. He is incurring a loss. It's currently at 1,045 or thereabouts. He's got 55 shares. He's wondering what to do. The question to you, Ajit, on the charts, what are the prospects on the upside? Where would you keep your stop loss?
Right, Alex. So it's been almost a year that the stock has been witnessing correction. It's a gradual decline from the record highs roughly around 1,750 to 950 now. And if you'll see from the last 2-3 months, we are seeing some base formation. Means around 950 on every dip, we are seeing that buying interest emerges, and then the stock witnesses a rebound recovery. But at the same time, the major hurdle is still intact, means the area of long-term moving averages, which is placed around 1,100. And that's the zone basically where we have the price-wise resistance also. So let's say once we break this zone, then probably we can see the decisive recovery which could push this stock slightly above his buying price. Means 1300, 1350 is something the stock might test once we break 1100 mark. So as of now, since the base formation is still in place, he can continue to hold his position with the 950 as a stop loss, and with 3 to 6 months, he can wait for 1350 as a positional target.
Okay. All right. Karthik is calling us from Bengaluru. Hi, Karthik. How can we help you today?
Hi, Alex. Good morning.
Good morning.
Yeah, Alex, I have a query with regard to Reliance Industries.
Okay.
So I bought around 8 shares at the price of 5,500. So I can hold this for another 1.5 years, but wanted to know if I can add more at the current price, which is at 6,100 something today.
Yeah. So you're looking for a technical view, is that right?
Yeah.
Got it. Okay. So it's doing particularly well today, Ajit. It's up about 5% or so, 6,215 on the ticker. Would you add more at the current price?
So Alex, I would rather accumulate. Means in case if he is planning to add a similar quantity what he already has, he should rather accumulate in this range of 6,000 to 5,800. Not at the current level, because if you see that it's been almost a month now, the stock has been experiencing volatile swings. Means in the range of 5,800 to 7,200. So probably we can get better levels to re-enter. Once we see any dip towards this 5,800 to 6,000 zone. And then probably for this entire position, he can maintain a trailing stop at 5,200 in case if the view is short term.
Okay. All right. Satyan has got the next question asking about Gland Pharma. Long-term perspective is being sought. His target is 2,500 to 3,000. And he's asking whether he can add more at the current juncture for a period of 12 to 18 months. The stock is currently trading at 1,522. So it's pretty stiff target, I would think. Ajit, would you agree? It would need to double.
Alex, see, it's still like, the trend is down. Every now and then we do see attempt of a rebound recovery. But since it's an underperformer within the sector and otherwise also, I feel that the right approach is to stick with the leaders within the sector. So stock like Divi, Dr. Reddy's, Sun Pharma, Lipin, they are doing much better. So instead of adding to your loss-making position in case if you have any, or you are planning any fresh bets in an underperformer, it's better that you should go ahead with the names which you just mentioned, or the other outperformers from this particular sector.
Quick question on that then, Saurabh. Based on fundamentals, would you switch to something like an Eris Life?
Yeah, Eris Life is a good choice. I mean, the company is doing good and the promoters are quite aggressive in their business. In case of Gland Pharma, I think, yes, the company is largely in the injectables doing nothing, and there is a margin pressure. There is a lot of competition in the injectable space. So I think it would be a better idea.
All right, Shiva is calling us from Hyderabad. Hi, Shiva. Good morning. How can we help you today?
Good morning, sir. I have 130 quantity, 130 SBI at the rate 810 rupees.
Okay.
I'm looking for dividend. If I exit, I have bought it on May 1st. If I exit right now, will I get dividend? That's what my query.
Okay, so I'm actually not sure. I'll have to pull up the record date. Effectively, you'll have to understand whether or not you have had the stock. Saurabh, do you have that data handy? And if at all, I do not know. Shiva, why do you want to exit at this point? I'm just curious. When you bought it on the 1st of May, did you only buy it for the dividend?
Yes, exactly. I only bought for dividend, and I will wait for 810 also. At the rate 810, I can exit right now. Yes.
Saurabh,
when the 810 price comes.
Saurabh, you want to weigh in on this strategy?
See, 15 rupees 90 paise was a dividend. The dividend got axed on the 16th of May.
There you go.
So he will surely be getting dividend. And with regards to its holding, I think it's a kind of a portfolio stock you can hold for the long term.
Okay, the dividend apparently will be paid on the 30th of May. So you will get your dividend. It is a portfolio stock, as Saurabh has pointed out. Let me very quickly go to Ajit. Ajit, 810, not too far away from the current market price. Is that something that is achievable in the near term?
So certainly, yes, Alex, because, when it comes to the banking space, we are seeing that on the rotational basis, both private and PSUs are witnessing decent traction. And within the PSU space, we have seen decent run-up in stock like, Canara Bank, Indian Bank and others. So SBI could probably the next candidate, because the base formation is going on for almost 2-3 weeks now, while holding above its short-term averages. So with stop at 780, he can in fact wait for 820 plus levels also.
Okay. All right, so let's take the next question. This is from Indonesia, and Srinivasan is asking this question. He's got BEL at a price of 185 rupees, 212 shares. He's planning to hold for a period of 5 years. Should he book profits? And considerable profits at this point. The question is, can you call a top at this point? And I have this question for the both of you. Saurabh, on the fundamentals, what more can you say about BEL? There's quite a bit that's happening for this company, but the valuations are something that you have to ask about, right? So would you continue to hold?
There's a good chase for all the defense stocks, and the BEL is among the one which is performing well. On the operational front, I think the numbers were great enough. There was a margin expansion also. The book is doing good. The order book is doing good. Yes, the valuations are on the expensive side, but yes, when the company is posting good set of numbers, who cares for the valuation? And that is what is happening for the BEL. I think for the next 4 or 5 years, it should be a good stock to hold.
Okay, quick view, since this is a stock that a lot of people are interested in. Ajit, on the charts, BEL, what is the potential upside from this point?
So Alex, if you see that within the defense stocks, last week we were seeing certain stocks witnessing consolidation after a strong surge, but BEL on the other hand continued to inch higher. It's been among the top performer in the Nifty 50 basket from the last 2 weeks. Now, after this strong performance, there could be a phase of intermediate consolidation, but considering the past consolidation means almost a year-long consolidation, probably 430, 440, in case if the view is, let's say, for 2-3 months, that could be the probable target the stock might test.
Okay, all right. The next question is from Shubham, who's writing in from Kolkata and asking about Piccadilly Agro. I don't think that he is bought yet. He's asking about a fresh purchase and whether or not he should make it. The stock is currently trading at 63. What's the view on the fundamentals, Saurabh? If you have coverage, would you suggest a fresh entry?
I think all the Alcobev companies are doing, and in my opinion, I think it is in the same segment. So it's a small company, but yes, he can hold on to it.
750 on the ticker. I must have misplaced that. The stock is trading at 555 or thereabouts. All right, so it's a good pick. But having said that, Saurabh, what according to you is a top pick in the Alcobev space?
I think United Breweries, Radico Khaitan, both looks good.
Okay, all right. Tata Motors, and this is a question from Razia Sultana, who's writing in and asking about it. She's not really told me anything more in terms of what she wants to know. The stock is currently trading at 733. There's a lot that's happened over the course of the last few months on this company, not least of which has to do with their international business, which is Jaguar Land Rover, and the tariff concerns in the United States. Some of that has dissipated. The question is whether you would deploy at this point or not. So, Saurabh, would you buy at levels of 730?
I think it is very difficult to take a call on the Tata Motors based on what is happening in the global arena. I mean, major part of the revenue comes from the Land Rover and Jaguar, and the tussle is still on. And we are talking about lower demand also. So, in my opinion, I think it is better to invest on the domestic one, like maybe Mahindra rather than Tata Motors.
Okay, all right. So that's a view on Tata Motors. Mahindra & Mahindra is the preferred pick based on the fundamentals. Raj is calling us from Tamil Nadu. Hi Raj, good morning. How can we help you today?
Yeah, so I am holding the share of IDFC First Bank 390 at the average price of 70.66. Now I could see shall I consider accumulate more since I am ready to hold for a long term, because I could see some institutional investors voting rights issue with Vaidyanathan to be in the CEO space. So on that note, shall I consider since it is in the downfall? So.
All right, so we've got Saurabh, who's already indicated that his preference in the banking space is ICICI Bank as well as Canara Bank. But let me get you a view on the technicals. If you bought at levels of 70.66, it's not too far away, if I'm not mistaken. Let's pull up the ticker, just see where it is right now. IDFC First Bank, can we do that? The intraday chart for IDFC First, it's at 66.69. So not too far away from the current market price. From that perspective, in the near term, what are the triggers according to you, Ajit, and what levels would you watch for? Where would you put your stop loss?
So, Alex, if you see that it's been almost 1.5 years now that the stock was witnessing corrective phase, but in the last couple of months we have seen a very sharp rebound. The stock has reclaimed its major averages on multiple time frames. So that gives us comfort that yes, the declining trend is over, and probably we can see some fresh momentum also once we cross this 70 hurdle. So in case if the view is, let's say, for 1 year, 2 years, definitely he can consider accumulating. Now at least the stock should hold 60 levels decisively in months to come. So until we break this mark decisively, there could be a possibility that 85, 90 is something that the stock might attempt in next 6 to 9 months.
All right, I'm circling back to you on this one. Varun Beverages, it was a stock that was in focus on Friday. It gained as much as 4%. It's down about 0.8% in trade today. What is the target price money is asking for Varun Beverages for a 1-year time frame? He's bought at levels of 498 and he's got 231 shares. He's in a small loss at this point. He's bought at 498, stock is at 484. What is the strategy that you would employ for a 1-year time frame?
So Alex, I would recommend him to at least liquidate partial position in case if that is his final position, because probably he can get better levels to re-enter. Because if you see, the stock has been a steady outperformer for the last several years. It's just that in the last couple of years we are seeing a bit of a consolidation or a sign of like a slightly topping out in the medium to long-term charts. So probably close to around 440, 400 is the zone basically where we've tested last time also. It's a good area to re-enter, or in case if we see a breakout above 550, then only he should re-enter, because otherwise he'll keep on holding it, let's say for the next couple of months without any major action.
All right. We've got our next caller from Bengaluru. Chindu is calling us. Chindu, very good morning. How can we help you today?
Yeah, actually I'm holding a share of Ceat, 1,000 shares at a price of 3725. So my question is, should I hold it or book the profit?
So I just want to confirm, is it 3275 or 3725?
3275. 3275.
Yeah. Because Chindu, that makes all the difference. You're sitting on a gain of 5.2 lakhs or thereabouts. And that wouldn't be the case if you had bought at 3725. Okay. So your question is, should you hold for the long term, is it?
Yeah.
Okay.
And if I hold it, how many more months should I hold?
Okay. But did you buy it based on the business or did you buy it based on the price action?
Price action.
Okay. Ajit, on the charts then, the question is for you. The stock has run up quite considerably after its numbers, good set of numbers, and relatively speaking in the tire space. Would you hold on at this point or would you book?
At least I would book partial profits, Alex, because from 2200 to almost 4000 mark in no time. So probably we can see a dip towards 36 and 3500 in the near future. So it's prudent that at least book partial profit and then maintain a trailing stop loss at 3600 if the view is less than a year.
All right, let's take a couple quickly. Geeta from Bengaluru is asking the next question. Gujarat Gas, bought at levels of 630. Would you book losses at this point? Is the question. Ajit, on the charts, what would you do?
Yes, certainly, because Alex, I doubt that the stock can make any meaningful up move once until we break 500, 510 levels decisively. So if the view is, let's say, less than 3 months, it's prudent that she should book losses and switch to the better counter.
Okay, we've got Manoj from Mumbai asking about BHEL, bought at levels of 248. What is the future? Is the question. I guess he is asking about the fundamentals. Would you hold at this point? Saurabh?
I mean, the company is putting up a good show. They've been getting good orders. In my opinion, it is a hold.
Okay, so it's a hold, is it?
Yes, it is a hold.
Okay. All right. Would you buy Relaxo footwear at this point? And what is the breakout level in your opinion, Ajit? This is a question from Yash, who's writing in from Gurgaon. He's holding at a price of 1,052 for a long time. What's the view?
So Alex, it seems like a short-term bottom. So probably yes, one can buy, and 425 should be a stop loss. In the next swing, close to around 480, 85 is something that the stock might test.
Got it. All right. That brings us to the end of this edition of Ask Profit. Saurabh as well as Ajit, thanks so much for joining in. Pleasure having you on the show.
Thank you.
We've discussed a lot of stocks today, and hopefully, even if your specific question was not answered, you've benefited from the stocks that we've discussed. We've got lots lined up for you over the course of the day, starting with Know Your Company. That's up next. Do stay tuned. This is NDTV Profit.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in?
Hello and welcome. You're watching KYC Know Your Company and I'm Harsh Saita, your host. I'm going to today talk about the IT index. Now, in terms of the way and the manner in which the IT index has performed, it's done very well from the lows. From 32,000, we've rebounded quite well. While the macro does not seem to be improving in significant fashion, at least on ground at this point. Commentary also did not see a material improvement, and that's exactly why we've brought in E-Clerks Limited to talk to us about IT and what are the trends playing out in IT. Now this entire small and mid cap space in IT is evolving and is very, very interesting. Some stocks have rebounded all the way to 20-25% and all the way to back to their highs or towards their highs, and that's why it's starting to look very interesting, and it's important and relevant to zoom out and know whether there's actually expected to be a recovery here. What are management seeing and what is it that's transpiring in the US? There's plenty happening on tariffs. Is there a tailwind with regard to US macro? Once tariffs start to possibly, or the concerns start to ease out, which it has, could you start to see an unwind with regard to all the pessimism in the US? That's the other thing that we will try to understand from management. The third piece is, let's look at E-Clerks specifically. What's making it unique? What's helping it stand out? Or is it just another IT company within that IT basket? Are margins eroding is my next question, and they have been. The margins were well north of the 20 to 23% number. Now they are sub 20%. So clear erosion with regard to margins, and is that a concern? And the last piece is, what are growth prospects looking like for the coming year and for the medium term? What should one pencil in terms of growth? And therefore, in that context, how do valuations stack up? All of this we'll try to break up on today's KYC. Let's first start off and look at what the company does. And E-Clerks is a pure play IT company incorporated in the year 2000. It got listed in 2007, or more so 2008. It provides business process management, automation and analytics services. That's broadly its service offering. It caters to what kinds of businesses? Financial services, communication, retail, media and manufacturing technology companies. So all of those is what it caters to. Last off, and more importantly, how's the breakup in terms of industry? And you're seeing the numbers, of course, Q3, Q4 and full year FY25 largely stable. And therefore, let's just look at the FY25 numbers, which is the column, or rather the row right at the end. Look at that. BFSI is around 43%. Communications is around 26%, and communications includes media and basic technology as well. Then there's high tech. High tech plus manufacturing is around 16.5%. You have fashion, which is roughly 9%, slightly different, but largely in that retail basket. So retail, fashion and the like. Then there's emerging businesses, which is roughly 5%. That's how it's broken up. So a very high reliance on banking, financial services, communications, media, telecom. That's broadly how it's split. So something to keep in mind. Now, in terms of currency contribution, dollar is largely the predominant contributor. Nearly 80% of its top line comes from the US. Euro is around 8%. So Europe too, some bit of exposure, and then there's small exposures from the UK as well as others. That's how it's split up, and that's how you'll see even the geographic concentration. There you go, around 78% from the US, 14% from Europe, which would likely include the UK as well, and then there's 8% rest of the world. So US concentration is extremely high, and that's why we've picked this one. It's an interesting one. Now, in terms of offshore, that's days of sales outstanding, broadly flat, nothing to be too concerned about. Let's look at offshore voluntary attrition. Now, what exactly is an onshore service and what exactly is an offshore service? I'll try and quickly split that. The onshore services is when a US company is availing services from an Indian company having a US presence. So it could be an Indian company listed in India, but having a subsidiary in the US, having people in the US, the 2,000 odd people or 5,000 odd people in the US are servicing the US based company. This is offshore. So this is people sitting not in the US but in India. And that's broadly what E-Clerks does. And the offshore, and you look at the numbers in front of you, 15,000 versus just about 600 which are onshore. That's largely the split. And in terms of what the attrition is like as well, that's the other concern I have. Attrition has gone up. So I want to understand from management whether that is going to be a concern. 24% attrition is what the company has clocked in FY25. We're going to speak with Srinivasan Nadathur, the CFO of E-Clerks, but let's try and first, as we always do, understand the metrics behind E-Clerks and what it has done over the last 3 to 5 years. These are the rating parameters for E-Clerks, typically with all IT companies. We'll start off with the income statement, balance sheet, cash flow, and thereafter look at return ratios. You also have shareholding, street cred, street coverage, and valuation. So that's how we'll kind of break it up. And let's quickly get you our views. Let's look at the numbers to start off with. In terms of the income statement, you look at the top line growth, it's roughly around 16% on a 3-year CAGR basis. Revenue in FY22 was around 2,100 odd crore. Currently sitting at around 3,400 odd crore. In terms of the size, it's extremely small, and therefore Would you want it to grow at a faster clip? For sure. So that's where some of my pessimism comes from. The other piece is with regard to EBIT. Look at that EBIT growth, just 7.5%. So your top line is not translating to profitability. That's how your EBIT trend has been over the last 3 to 4 years. So you're not seeing a very sharp increase with regard to EBIT. And therefore, if I can take you back and look at the margins, you look at how the margins have evolved, they've been on a continuously falling trend line. 26%, 23%, 22%, and now you're at 20%. So you're sitting on a lower margin number. And therefore, if we look at the first graphic again, the net profit has actually gone from 418 crore to 541 crore, which is just about a 9% CAGR growth. Not significant, right? And you're looking at a company which is sub 20,000 crore in market cap. So you want it to grow faster, you want it to grow towards the 1 lakh crore, but at this rate, it's not going to do that for a fairly long period of time unless something strategically shifts. And for the moment, we are not seeing that, at least on the income statement. And that's why I give this one a thumbs down. But the balance sheet looking fairly good. Let's look at the net worth of the company. It's sitting at around 2,300 odd crore. That's on your screen. And it has a fairly decent amount of cash and bank balances, as would understandably be the case with IT companies. They always come out with solid amounts of cash. They distribute that cash across the board. And therefore, it's looking like a decent balance sheet as such. No concerns, no debt whatsoever. So fairly clean, a thumbs up with regard to the balance sheet. Now let's look at the cash flow. The cash flow, again, an interesting one. And this time what we've tried to do is we've tried to get you operating cash flow to PAT. I want to understand how much of that profit after tax number is reflecting in operating cash flow. And look at that, 101%, 103%, 121%. So very strong operating cash flow flowing from the profit after tax straight to the company. Some part of that is getting distributed, of course. They have done a buyback of nearly 400 crore in FY25 at the start of the financial year. And therefore, you will continue to see distributions come in because as is the case with most IT companies, the cash coming in is very strong, whereas the amount of capex required is not that large. And therefore, a positive even with regard to the cash flow. No concerns. Even receivables, we spoke about the days of due or debtor days. That also is not fluctuating in a significant fashion. Now let's look at the return ratios. And as is usually the case, you will have a fairly solid set of return ratios which are coming through. The only downside here is it's on a falling trend line. You want it to start to go up, rather it's coming down. That's the one concern. But nonetheless, you're holding steady. When you're looking at, and I'll tell you why I've given this a thumbs up. When you're looking at the broader universe of companies, you'll largely see that ROCE above 20% is very healthy. But when it comes to IT stocks, ROCE of 20% is nearly a given. And as it scales, the ROCE ought to inch up. Now, this one is on a slightly difficult glide path with regard to returns and margins. And therefore, you're seeing a fall with regard to ROCE and ROE ratios. And therefore, you're seeing a bit of concern there. But when you're looking at it from a broader universe perspective, your return ratio is very healthy at 21, 22 odd %. But there's again no reinvestment happening in the business, right? And second, a large part of the cash flow, therefore, is coming straight out as dividend. So those are some things that you want to keep in mind when you're looking at the return ratios. Let's look at shareholding now. The shareholding, promoter holding is around 54 odd %. FI is around 10%, but it's fallen from the 12% number same time last year. DIs have increased their holding from 23% to 25%. But broadly, why the thumbs up is because the promoter holding is fairly strong and fairly steady at 54 odd %. Now let's look at the street cred. You look at the 6-month performance, you look at the year-to-date performance, it's a fairly muted performance. But you look at the 1-year performance, 54% up. And you look at the 5-year performance, it's very solid at 11x. And that's where you start to see the outperformance shine. So in the near term, it's been a bit of a drag, yes, for sure. But over the longer period of time, it's done very well for itself. And therefore, we'll give this one a neutral because of the near-term headwinds it's seen. Last couple of metrics. Let's look at valuations now. And again, this is a very interesting piece. We'll come to street coverage in just a minute. Let's look at valuations first. You look at the way it stacks up in terms of valuations. Now, these are all its peers. You're seeing E-Clerks at 25 times, 5-year average is 20 times. So it's already trading at a 25% premium. You have First Source, which is trading at 33 times. It's currently sitting at 44 times. So very strong growth coming for First Source. That's being built in by analysts. 33 times 1 year forward, but the 5-year average is 36. So still some scope for upside. Look at Hinduja Global. It's trading at 47 times, 5-year average is 28 times, and a Birla Soft is trading at 19 times, 5-year average is 22 times. Now, Hinduja Global is not trading at 47. I'm going to change that. It's Newgen Tech, which is trading at 47 times, 5-year average is 28 times. That's how the valuations essentially stack up. You look at other companies. They're looking cheaper compared to their 5-year averages. That's point number one. But at the same time, E-Clerks in absolute terms is trading at a lower valuation compared to others. But it's also offering lower growth. There's some bit of headwind on the margin as well. So you want to look out for all of those factors when you're deciding in on valuations. We're giving this a neutral. There's no comfort per se with regard to valuations. It's obviously trading at a premium. But at the same time, it's a slight discount to some of the other IT stocks. And therefore, if it significantly outperforms from a results perspective, you could well see this stock re-rate. That's something that I would want to be looking out for if I were to be looking at the valuations versus some of the others. So something for you also to look out for. Neutral with regard to valuations is what we're calling it at this point. And when you're looking at how analysts and the street is viewing this as well, there are just about 10 analysts covering the stock with just a 7% upside. 8 buy calls on this one. So largely, there's no comfort with regard to upside either. So we've given a neutral, and that is reflecting here, and hence we took street coverage post valuations. So just kind of caps all of this out. Let's look at the summary of how all of this stacks up. You're seeing balance sheet, of course, healthy, and no doubt cash flow decent. Return ratios compared to the larger universe, I did mention that, is a thumbs up for sure. Shareholding is a thumbs up. Street cred, street coverage, valuation, more to be desired, especially on that street coverage and valuation. So we've given this a 5.5 on 8. Now, we'll focus in with regard to the management. I earlier spoke with Srinivasan Nadadhur, who's the CFO at E-Clerks. Here's what he had to say with regard to Trump tariffs first, because the road ahead for the company is going to be largely based on how the US performs. So a couple of questions on the US to start off with. Listening. Right, in conversation with Mr. Srinivasan Nadadhur, who is the Chief Financial Officer at E-Clerks. Welcome, sir. First off, I want to understand from you what the impact with regard to US tariffs is likely going to be, because you have such a large mix coming from the US in terms of business.
Thank you, Harsh. Thanks for having me on the show. So we primarily are a provider of IT services, and therefore first order impact is nil. But we do have clients in high tech and retail, and they may have some impact because of tariffs to their business, and therefore there may be some second or third order impact for us. What that means as of now is not very evident to us, but we do know that a lot of their management bandwidth is being consumed on how to manage the new situation that has arisen in their businesses.
That's interesting, sir. And you know, if I can couple that with the way in which demand is shaping up from the US, because you're so skewed to the US, is demand in the US showing any sign of recovery whatsoever at this point, just given all the headwinds that are there and in combination that some of the businesses there are facing?
Actually, our pipeline remains strong and it has improved over the last 1 year. And other than the fashion and luxury segment, which for us is a very European-focused business, we are seeing good demand in all the other parts of our business, including the US. So at least on the demand front, there appears to be not much of an impact that we can see today.
Okay, and is there a conscious call to try and go and make the other geographies slightly larger, and is there a preference to go more towards the US? What is the internal preference like? What's the strategy like?
Our internal preference has been always to make Europe and other East Asian companies, East Asian geographies larger. Having said that, we've seen a lot of growth, and this has been the preference for maybe the last 4 or 5 years. But the growth from the US has been very strong for us. So I would say that, as you rightly pointed out, we still continue to be heavily reliant on the US.
So what can you extrapolate from this? How should the next 3 years probably play out? How would you play this very difficult headwind cycle that the US is seeing in terms of numbers?
It's hard to give specific numbers on what the next 3 years would look like, but we've always been focused on, firstly, we are a small company, so maybe that impact for us may not be as much as that for larger companies who are reliant on larger mega-sized deals. So our focus will continue to remain on solid delivery and execution, and to remain close to our clients and try and add value in whatever that they are trying to do through technology, through AI, and so on. So that basic fundamental aspect of our go-to-market strategy that remains unchanged.
And what's the thought process behind employee costs? They've continuously climbed. When you're looking at the last 5, 6, 7 year trend, employee costs are trending higher. And that is in some fashion impacting your margins as well. At what point does that peak out, stroke bottom?
So there are a couple of reasons for that increase. One is that over the last 5, 7 years, the percentage of revenue that gets delivered onshore, that has nearly doubled. So maybe 8 years back, it was about 10%. Now it's about 20%. So that is one main reason. And the second is that we've started over the last 2 or 3 years to invest more on analytics and technology skills. And these skills, as you would know, are more expensive. We will continue to invest in AI and technology skills. The onshore component will stay where it is. So we may see a gradual, maybe a very slowing down of that increase. But again, if I think we will want to invest more in technology and analytics because we want to make that a larger part of our portfolio.
And therefore, would you say that margins at this point have bottomed, or there is still some way to go, maybe a year or so? And these AI costs that you will incur, will you expense them, or will you, and of course as an extension to that previous question that I asked, would you expense them, would you capitalize them, and therefore what will the impact on margins for that be?
So as of now, everything, the investments are fairly small, so it's all being expensed. There is no capitalization. To your first question on what the margin range for FY26 and maybe future is going to be, I can talk about FY26. So we give a 4% range on the EBITDA margin, including other income, which is about 24 to 28 is what we had said for FY25. We ended up at 26%, right in the middle. And we are continuing in the same range for FY26 as well. There are a couple of headwinds. So we opened delivery centers in Lima and in Cairo. So there may be some headwinds, but as a percentage of the portfolio, it is likely to be small.
What are the new age growth levers that you're looking for, or how do you take this from 3,500 odd crore in terms of top line to 7,000? Would it just be consistent 10-15% kind of growth compounding, or would there be new levers that you look for to push the growth baton?
So we are looking at a couple of things. One is to strengthen sales operations and effectiveness. So there's a lot more focus on how we are selling, what we are selling, whether there are conversations that are maturing, how much time it is taking for deals to move to down the funnel. So that is one. The second is we have digital services, we have technology, and we have customer experience services. These we want to cross-sell across our entire portfolio, across our entire set of clients. And the third aspect is that we want to sell more larger deals and not just focus on smaller deals. So these are the three areas that we are working on actively.
And how do you stand out to try and win those?
I think it will be what has set us apart till now has been execution and delivery, and that will continue to remain our basis for selling.
Is there a plan to build moats? What really helps you stand out? Is it the relationship with the client that you have? Is it the niche that you've created within the sector space? How does that work?
So the moat is essentially the kind of domain that we are working in, and that tends to be high complex, high touch domain. So we have very close relationships with clients. We work in domains that are more complex, require a higher level of skill, and that's something that we will continue to strengthen even in the future.
And what about segments? You work across a wide board of segments: financial services, communication, retail, fashion, media, entertainment, manufacturing, travel, leisure, technology. Where is it that currently you're best placed to capture the largest available opportunity?
So in BFSI and in cable media telecom, these are two areas where we see significant pipeline growth. Those have been the growth drivers for us even in FY25. So we expect that at least in the next 2 to 3 quarters, growth will be led by these two industries.
Okay, you'll continue to deliver value to shareholders through buybacks, or is there a larger plan to maybe invest to go into inorganic expansion? Is that at all on the table?
It is on the table, so we continue to look for opportunities, and as and when something interesting comes along, we will use the cash for inorganic.
How large would it be? In what segment, space, pocket, geography?
Geography will be developed countries. In terms of size, maybe 10 to 20% of our revenue is the maximum that we will look for. And in terms of capability, it will be something that adds to what we already do. So either in the data space, analytics, or technology.
What does this new setup, new delivery center in Lima and Cairo bring to the table for you? Does it bring, of course, new set of opportunities, but how large would those opportunities be? How much would it add in terms of top line, maybe over the next year and maybe over the next 5? What's the thought process?
So this has been driven on the back of client demand. So clients want us to deliver from multiple geographies, and that's what we've addressed through these centers. It also gives us the capability to service multilingual requirements in a more meaningful way. So something like Spanish, which we were not able to do at scale earlier, which we'll now be able to do. It's hard to, again, see where this goes in the next 5 years, but we believe we have a reasonable amount of visibility for the next year or so. We've started small, but hopefully these centers will continue to expand.
Are there more centers in the pipeline? Is there more demand coming from customers? And does this cause margin headwind, at least in the near term?
There will be some amount of headwind in the near term because of these two new centers. But I think because they are small, the impact on the overall book is not likely to be much. And we believe that we can manage the drag on margin. At the moment, we have no plans for opening anything more. I think we need to get these couple of centers up and running at scale before we decide to go in for anything more.
And your attrition at, well, out of time, frankly, on this one, we spoke about attrition as well, and he suggested that it's fairly normalized. There are no concerns whatsoever with regard to attrition. But completely out of time on this edition of KYC. Stay tuned to NDTV Profit. More action on the other side.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind?
Hello and welcome to Markets at 12. I'm your host Anushi Vakharia. Let's take a quick check at how the markets are doing currently. First off, starting off with the benchmark indices. Now what we are seeing in terms of Nifty 50, we are seeing gains of around 0.6%. Seen a slight bit of an uptick in the last half an hour of trade or so. Currently the day is high at 25.79 while the Nifty 50 is trading or hovering near the range of 25,000 over here. In terms of where the Nifty Bank is headed, Nifty Bank seeing gains of over 0.23%. We've seen a slight bit of an uptick here as well. In terms of the point contribution table is, let's see which are some of these stocks bucking up the trend today. Now we have something like Reliance in focus, ICICI Bank, M&M, other stocks which are pulling up the index, while Eternal is one stock which is down under pressure today. This is on the news flow of its outflows which will take place in the MSCI and the FTSE indices. So some bit of pressure in Zomato, that's Eternal that we are looking at. Sun Pharma, Ultratech, Cement, other stocks in counters which are under pressure in trade today. So that's as far as where the Nifty contribution table is holding up. In fact, let's also see the Nifty heat map to see where the major action is taking place. So in terms of where the heat map is, M&M top gainer, Bajaj Auto, it's the auto pack in focus, Hero Motor, M&M and Bajaj Auto all seeing gains of around 2%, while Eternal, as we discussed, seeing cuts of around 3 odd percent or so, while flattish moves in counters like Grasim, Sun Pharma, Ultratech Cement and JSW Steel is what we are looking at. In terms of where the broader market action is concerned, now let's pull up Nifty Midcap 150 in terms of where, so we are looking at gains of around 0.5%, similar to what we have seen in the benchmark index, that's Nifty 50. And where small cap 250 is concerned, let's pull that one out as well. We are seeing gains of around 0.52% here as well. Let's look at BSE 500 to get a gauge of which are the stocks under focus. Weber Global right at the top, seeing gains of around 8%. Phenolics, this is despite a weaker set of earnings that we are looking at. The stock is up over 7% in trade today, while for India also we are seeing gains of around 6%. Again, the trigger being the fourth quarter results is what we are looking at. While on the losing end, we have something like a Balkrishna Industries seeing cuts of around 6%. We will discuss the stock later on the show as well. Hikal, another counter, seeing cuts of around 6 odd percent or so. Team Lease, another counter, seeing cuts of over 4%. Eternal, Dalmia Bharat, other stocks in focus here. In fact, let's see which are some of the top gainers in the mid-cap space and top losers in the mid-cap space as well. So in terms of where the gainers are in the mid-cap indices, if we are considering that, so this is what we are looking at in terms of where the Weber Global, Phenolics and Linde is. So this is overall the Astral currently seeing gains of 3%, Paytm and MRF also. MRF is seeing gains of over 2% in trade today. In terms of where the sectoral indices are concerned, now for sectoral indices, let's see which are some of the key sectors in focus. Now here we are seeing auto pack right at the top of gains of over 1%. IT is another one seeing gains of over 1%, while it's media and PSU bank which is under pressure. So this is as far as where all the action is happening in terms of where the markets are concerned. But let's discuss individual stocks, and the first one on the radar is GE Vernova. Now what we are looking at for GE Vernova, now this is buzzing on the back of its fourth quarter results. They've posted their best operating profit margin, and this is the best seen in the last 3 years at least. Net profit is also the highest seen in the last 3 years, and it's the margins which are a standout this quarter, which margins have expanded on the basis of better pricing along with improving exports as well as change in the product mix. In fact, if you look at the headline numbers, revenue up over 26%, EBITDA is about 2.3 times of growth we are looking at, which has resulted in margins moving upwards to the range of 22% as compared to 12%, and net profit in line with the EBITDA jump has seen about a 2.8 times of a jump. In terms of where the order book is headed, so if you look at the Q4 order intake, we saw about a growth of 124%, with the value standing at 2,990 crore, just shy of the 3,000 crore mark, while for overall FY25 the orders were up around 860%. FY25 order backlog stood at the levels of 12,660 crore at the end of FY25. Now in other key highlights, the company also mentioned that they are looking at 1-2 HVDC projects which will be finalized in FY26, so watch out would be that as well, since these are big ticket order sizes that we are looking at. So how this would shape up the order intake for FY26 is another factor that we should be watching out for. Other than that, they also expect a 240 crore of organic capex over the next 2 years. So GE Vernova in focus, the stock currently locked in upper circuit of 10%. But let's also talk about Balkrishna Industries. Now the stock has cracked over 9% on weak fourth quarters, and brokerage has downgraded, citing increased risk from new competitive business forays. Puneet joins in with more details on this.
So definitely it's a big negative coming in for Balkrishna Tyres, largely also partly because of this earnings, that net profit is down 25%, but majorly because of the company's entry into passenger car radial tyres, which is tyres for cars essentially, as well as the truck and bus radial tyres essentially. Now the key contention is that's a very hyper competitive market with players such as Apollo Tyres, MRF as well as Ceat having a long stronghold over the last 3 decades, and hence an entry with a minimal capex at this point of time, considering the opportunity, could be challenging going forward. Now they've also mentioned that roughly 3,500 crores of total capex will be for 3 separate ventures, including the new tire tire capacity and new tire segments, but they've not given a separate breakup for what the opportunity is. The company did highlight that this will only come in post 24 months, so over the next 2 years we still won't see any entry by the company in this new segment, but the capex outlay as well as the plans currently for the company seem to be they'll be only targeting a very niche market in the passenger car radial space, and that might not give the desired returns at least over the next 5 years. We've also seen brokerages such as Citi as well as Nuvama come in and cut target prices. Citi has maintained the sale rating target price of 2,400, and they've said that they are relatively cautious on the company's new foray into the passenger car radial space. They've also said that the strategy, which is for sales, distribution, marketing, amongst others, is very different to the company's traditional agri as well as off-highway tire capacity, and hence they've cut the valuation multiple by 10%. And Nuvama, they've downgraded actually Balakrishna to a hold now. Target price is cut by 13% to 2,700, and one key point that they're making is while over the medium term increasing this would be a logical step and increase getting into a new segment, the competitive intensity is much larger in this, and you need a separate brand essentially for getting into this space. So that's one of the key verticals. Balakrishna is also the most expensive tire stock amongst all the 5 companies listed, so we're seeing that valuation re-rating, but definitely the street not liking this entry into the passenger car tires as well as the truck and bus radial tire space for Balakrishna today.
Well, thank you for that, Puneet. Balakrishna Industries down about 6% in trade currently. But before we talk about more stocks and what's happening with the markets, let's talk beyond these 4 walls that we are looking at. Mumbai woke up to lightning, gusty winds and thunderstorms this morning, causing severe disruptions to suburban rail services and traffic. The India Meteorological Department has issued a nowcast warning forecasting thunderstorms accompanied by lightning and intense rainfall. This is over the next 3 to 4 hours in Mumbai, what we are looking at. Meanwhile, an orange alert has been issued for the national capital, Delhi, with rains and thunderstorms expected. To discuss the situation further, we are now joined by Air Vice Marshal G.P. Sharma, President of Meteorology and Climate Change at SkyMed. Hello and welcome to the show, Mr. Sharma. First off, now what we are looking at is heavy rainfalls today. Also, this will also mark Mumbai's earliest ever monsoon. Just want to understand from you, what is the current kind of environment that we are looking at in terms of where the rainfalls are concerned?
You see, Konkan region has been having a heavy rainfall for the last almost 48 hours. Mumbai escaped with just about moderate shower, that is yesterday and day before. Yes, last night onward, the rains have picked up for Mumbai also. Colaba had very heavy rains, 120 millimeter, whereas Santa Cruz was shade less. But then today morning onward, the non-stop rains going on over Konkan region, including Mumbai and all the suburbs also. Heavy rains are likely to continue, I will say, for the next about 4 to 6 hours over Mumbai. Also, since the high tide time is also there, 1 to 1:30 or so that will add to further the waves which we have. High tide, the wave height, storm surge will be there almost about 4.5 meter, means about 15 feet or so. So one needs to exercise a lot of care because that will add on to the normal astronomical waves which we have. High tide put together, it is going to be a little risky going along the coastline. Flooding possibly may take place in the low-lying areas. So this will continue. Today we need to be a little cautious. Tomorrow may ease out a little for Mumbai, but Konkan will continue even tomorrow. Major breakthrough that will come day after tomorrow when the rains are going to ease out. Yeah, that's it.
And Mr. Sharma, what's your prediction for the next few days? Now, with the onset of this early monsoon, it is also being considered that 2025 might be the year which would break previous year's records as well in terms of where the early monsoon is considered.
That's right. You see, this monsoon in Mumbai was 29th of May. Okay, so that's it. This could be the earliest. This could be the earliest monsoon. In any case, Maharashtra also we are having the monsoon early arrival, beating the record of last 35 years because monsoon has already entered. It will cover some more parts of Maharashtra in the next about 2 days also, with heavy rains, heavy to very heavy rains over many parts of Maharashtra. Mumbai, in any case, as I said, that also will break the records of arrival of earliest monsoon. And you see, the situation will improve after about 48 hours or so. We need to be very, very cautious, exercise all cautions for the next about 24 to 36 hours. Konkan region, Mumbai for the next about 12 hours or so. Tomorrow possibly it will ease out a little, but the southern suburbs of Mumbai still will continue from Sindhudar, Raigad, Ratnagiri. These areas will continue. But then the Mumbai, major improvement in case you say, that should come around the day after tomorrow. Yeah, that's it.
Okay, so day after tomorrow, some improvement seen over there. Thank you, Mr. Sharma, for joining and sharing what is all happening with the prediction as well. Thank you so much once again for joining us. But shifting focus and back to the markets, Eternal faces $840 million of outflow hit this week as FTSE, MSCI slashed their weights. Can this food delivery giant weather the storm? Let's bring in Somit with more details on this.
Well, yes, Eternal will remain in focus given the fact that there are now $840 million of outflows expected this week on the back of the fact that both FTSE and MSCI have reduced their weightages of Eternal on their respective indices. Now, this weight change is because the company had earlier implemented the reduction in FPI limit in the company to 49.5% from earlier a limit of around 100%. But there are differences in this weight reduction that FTSE and MSCI have done this time. Specifically for FTSE, unlike the headroom related weight reduction which is implemented in phased manner, direct reduction may lead to one outflows in one shot for Eternal. And for an MSCI case, if you look at, there were no changes announced last week when MSCI had done the index rejig, and no changes were expected till the August review as well. However, the MSCI has come out and announced this change in weight reduction for Eternal out of turn this time, and the outflows that we will receive because of FTSE weight reduction will be around $380 million on May 27, 2025, while for MSCI outflows are expected to be to the tune of around $460 million on May 38, 2025. So total of $840 million expected this week. However, also do remember that on Friday the stock had gained 5% on expectations of no changes that could happen as early as August. So we had seen a strong gain in the share prices on the back of this, but out of turn, both FTSE and MSCI have come ahead and announced reduction in weightages of Eternal.
Well, thank you for that, Somit. The stock currently under pressure, seeing cuts of about 4%. But primary markets are starting to buzz again. This is over half a dozen companies have filed for their IPOs in May. My colleague Hiral has a more detailed data on this. Hiral, is the IPO mania back?
IPO mania is back, and what has happened is that your initial year in terms of 2025 was slightly subdued, and reasons known from the kind of uncertainty we saw in the global markets to the kind of FIs that were pulling out who have come back as well. But let's understand what it's looking like now. 76 IPOs that have been filed in calendar year 2025 so far, out of which, if you go to see, this is the highest number of IPOs that are filed in over a decade up till May 2025. Now, what's interesting is the kind of mix that we have between main board as well as the SMEs. First, let's understand the money that has been raised. Almost around 18,964 odd crores that have been raised by IPOs until May 2025 versus 48,152 crores in terms of the same period last year. So the amount that has been raised is still lower as compared to last year, but the number is what we are focusing on right now. Now, in terms of the distribution between main board listings and SME, 11 until May 2025 on main board versus 36 SME listings. And if you see the same data in terms of last year, 29 main board listings versus 32 SME listings. So the quantum of SME listings has remained the same, whereas main board has been slightly lower this time around. Moving on from there on, if you talk about more than half a dozen companies that have filed IPOs, let's understand the kind of companies that have come in. Canara HSBC Life Insurance, Canara Robeco AMC, Tata Capital, Urban Company, That's the top 4. Apart from that, you have BMW Ventures, Priority Jewels, Jinkushal Industries and Corona Remedies. So majority of them, if you have to see, are still from the BFSI space, to highlight it all. And you have a Mori Tech and Ravi Infra. Others, again, divided between various sectors. Let's understand the 6 IPOs that have come in terms of May so far. Burana Weaves, that has already been launched. We've already seen 144 crores is the size. Bellrise, again, already launched, 2,150 crores is the size. Now, what opens today is the Aegis Wopac. 2,800 crores is what they are raising. Apart from this, you have Skoda Tunes, again 220 odd crores. Scholz Bangalore, which is Leela, opens today 3,500 odd crores. And Unified Data Tech Solutions, 144 odd crores. So these are the ones that have already come in terms of the month of May so far. Now let's just quickly recap 2024. It has been a record year. 91 companies which actually hit the IPO market back then, and they've managed to raise almost 1.6 lakh crores in 2024. Moving on, if you see in terms of the overall data as well. Now the key from here on is whether 2025 will be able to hit that 1.6 lakh crore mark or exceed that, because the quantum of IPOs that are hitting the markets is huge in terms of filing the DRHPs, but the mix right now is skewed towards SMEs. So the main board quantum is lower in terms of number versus the SME portfolio, and the amount raised in the period so far, it's a 48,000 odd crores in 2024 versus a mere 18,000 crores right now. So that is a key that we need to take into consideration whilst moving forward from here on to understand this market.
Well, thank you for that, Hiral. You know, that's a pretty interesting set of study that we are looking in terms of how the IPOs have fared. Of course, with the market recovery back in picture, the quantum, or rather the frequency of more IPOs coming, is something that we should be watching out for. But Narayana Health is in focus. This is after the company announced its 4th quarter numbers, with the PAT seeing a growth of 3%. This is on a year-on-year basis. My colleague Varsha joins us with more detailed breakdown on what has happened with Narayana Health.
Yeah, thank you for that. So overall, good set of numbers.